under any other set of circumstances, this seems to me like the type of thing, even if you go back to the 1998 impeachment, where there were some disruptions to the financial markets, even though the economy was in good shape. And here you see markets that have effectively shrugged off everything from the trade wars to various revelations from the anonymous op-ed piece that was in the Times a couple weeks ago. And so I don't know. Listen, you have a strong economy, no doubt about that. You have very strong earnings, no doubt about that. And those two things are taking precedence over absolutely everything else.
Does it make you think that the market is whistling past a graveyard?
Listen, I've thought that the market's been underpricing political and geopolitical risks since March of last year, and have been wrong. Now, granted, from January of this year till now, we have not made new highs, so we did move sideways in that regard. But yeah, I mean, I think that it is underpricing risk, but it's really up to the market here. The market knows collectively more than I do, and so they're looking through these things as not being fatal to the fate of financial markets here in the U.S. anyway.
Quint, when you're taking a look at the things that should be supporting the optimism or things that should be sparking more concern and pulling back, where do you come out on the signs and signals?
I definitely like what I'm seeing lately. The breadth has broadened. Sectors that we were really waiting on for the last several months that were not participating, financials, industrials, the emerging markets, China, they have really started to garner some attention over the last couple of weeks. And that's got us much more optimistic and putting some cash that's been sitting on the sidelines to work in those areas.
What are you buying?
Well, we've been buying the financials across the board, buying basically the entire sector. The industrials, and we specifically think that Boeing is probably the most important stock to watch for the character of the market. That stock's been moving sideways all year and now just starting to break out and gain exposure, obviously, through the stock itself, but also through the industrial sector. It's the largest component. And then we've been a buyer of China, and I know that's a contrarian play, but if you look at the character of the Chinese market, what was very fascinating was when the $200 billion in new tariffs was announced, initially sold off, but by the end of that day, while we were trading, the FXI was green. That told us that investor confidence in this being overblown was a potential. And then obviously a few trading days later, we found out it was a 10% and not a 25. It was off to the races. I think there's a great risk reward for that China trade right here and now.